Good afternoon. This is Clark Neighbors with the market recap for the week ending September 28, 2018, and the last trading day of September. Wow, time flies. For the week, corn down 4 cents, beans down 3, wheat down 17 cents. For the month of September, corn is down 12. Beans are actually about a penny higher, and wheat down 35. Now, one side note is we've seen an increase in a couple of commodities here of recent, namely in the energy sector, with crude up nearly $4 or so for the month of September. That's about a 6% increase for the month. That's got some traders talking about, and some of the big hedge money funds talking about inflation and the interest in maybe owning commodities going forward. We will see, but keep in mind October 1st is the start of the fourth quarter. See if there's any interest in that regard. Commitment of Traders report came out this afternoon. We continue to see short positions in the corn and the beans. The short positions have been set back in the last week, thus more length put to this market with short covering, which was very evident, especially in the soybeans over the last week. Probably the highlight of the week in regards to the grain market was the the stocks report that came out this morning. All the numbers were basically bearish, with corn stocks at 2.14 billion bushels, beans at 438 million bushels, wheat at 2.38 billion bushels, all three larger than the trade was anticipating. We also did get the annual wheat production number. All wheat came in at 1.88 billion, also a little bigger than what the trade was looking for. Now, of the bunch, the soybean number looks to be the most bearish. We did see the most pressure on beans coming out of the report. 438 million carryout, if you will, for the past crop year, and we'll see that on the S&D coming up here in about 2 weeks. Now, in these stocks, you have, if you use the current stocks in all positions and the size of this year's crop according to the USDA, at the end of harvest, theoretically, we'll have 440 million more bushels of beans than we did a year ago at this time, and about 70 million extra bushels of corn. That 440 million beans is a lot. Randy Middlestad, who is an analyst with R.J. O'Brien in Chicago, tied this final stocks number into his supply and demand, and for the 2018-2019 crop, comes out with a bean carryout next year at 958 million bushels. Corn at 2.047, so just slightly over 2 billion on the corn. That bean number is kind of awkward to talk about, because that's getting your stocks to use ratio almost at 25%. Now, what that means, folks, is at the end of next year's harvest, next year's crop year, assuming everything goes according to the USDA's plan going forward, our stocks to use is 25%, which basically saying that we will have 3 months supply of soybeans before we even start harvest next year. And I'll touch on base in this a second, as how that's affecting in the cash markets. But that is huge. It's huge, biggest we've ever seen. I'm not so sure that would be the biggest stocks to use ever. In fact, maybe going back to the early 80s, but that's a whole different segment there. So keep that in mind going forward. The other thing on these stocks, on this stocks report, with the increase in bean stocks, obviously, I think about 138 million bushels bigger than a year ago at this time. 125 million of that's in commercial space. So the producer has moved most of his corn and beans off the farm, or more so than he has in the last couple of years, but we are seeing an increase in commercial stocks on this report, and that may have some influence on harvest activity going forward. Now, weather has been kind of a two-sided affair so far. Granted, it's just approaching the 1st of October, but you get on a line roughly north of Interstate 80, there's not been much harvest done to this point. Yes, some beans, yes, some corn, but fairly limited because of recent rains. South of Interstate 80, I would assume a week, at the end of next week. Most of areas south of Interstate 80 probably will be 70% done with corn, if not more. And in some cases, beans just getting a good start. North of I-80 in a week, if the forecast holds true, we're not talking about a lot of harvest activity all the way through Nebraska, most of Iowa, parts of northern Illinois, up into Wisconsin, Minnesota, and the Dakotas, so keep that in mind. So as we go through harvest activity, we're starting to see logistical issues, transportation, etc. We'll see how far this harvest gets spread out. The more you spread the harvest out, the less of those factors fall into place with storage problems, logistics, etc. Basis continues to be incredibly wide. We have seen maybe some slight improvement in basis this week, depending on where you're at. Obviously we're still not seeing the biggest buyer of U.S. soybeans in our market at this point. With China, that continues to keep basis wide. It keeps spreads at historically wide levels. That's the market's telling everyone to lock in the carry and wait for better things down the road. Keep in mind looking at protection mechanism for the 2019 crop, both on corn and beans. And if you'd like to talk to us about that or how to lock in carry these soybeans, please give us a call. Our thought process is there's a good story to tell on corn, especially from a demand standpoint going forward. Soybeans we don't trust. I touched earlier on how massive these carryouts are. The corn-bean ratio or bean-corn price ratio right now is probably still heavily leaning to the beans, considering what the supply and demand says. In our opinion, that either means beans are overvalued or corn's undervalued, so stay tuned and see how that plays out. But if you'd like to talk to us on any of those things, feel free to call us at the office. Phone number is 800-373-2525. Catch us on the web, BIScommodities.com. With that, wish everyone a very nice weekend.